Yo, welcome to The Long and Short. It's your boy Maestro. Thanks for tuning in. Every day we give some crypto TA on Bitcoin, give a real market perspective on things that are happening out here. And boy, let's take a look at what's been going on with BTC. Last couple of days have been pretty damn bearish, actually the whole week. But in order for us to figure out how far this can go, right, we had to make some adjustments to our chart, and we had to zoom out a little bit and go to the daily to get a perspective on where things are sitting for price to actually go to. All right. Now, here's one thing that I want most people to understand. I'm not your typical crypto TA guy. You probably will never see me draw a trend line. And there's a reason for that. You'll probably never see me mention things like support and resistance. There's a reason for that. I believe in order for you to be a good trader, you have to take sort of a contrary perspective to things. And the only way that you can become contrary to things is if you use sort of a different thought process around what you're doing in trading. To develop a different thought process, you have to sort of develop a different language on how things are identified on a chart. If you're able to do that, then that starts to switch your thinking into more of a, let's say, smart money concept. Because smart money doesn't use trend lines, smart money doesn't use support and resistance. Smart money doesn't use supply and demand. Smart money knows exactly where they bought, exactly where they want to sell, and they push things to happen in order to achieve those objectives. If we can identify where they bought from, we can identify probably where they want to sell based on previous price action. And if we understand where they sell, which is usually after they break all-time highs, right? If we understand that, then we can understand where they may want to bring price back to in order to close out the orders that they put on the books in the first place. This is the entire basis around my TA, right? And while I'm able to sort of call levels that people aren't really thinking about, and price will go there, which is why I said earlier this year or going into December, right, coming into January, most people were bullish. I was a bit bearish. What other objectives does price have to break besides an all-time high, which it already did? Price is always seeking an objective. It's always seeking a level. How long it takes to get there and what price does in order to get there is what we call the fake outs. Oh, we think it's going up. Oh, we think it's going down. Everyone has a perspective, and then the market just plays off of that perspective in order to hit the objective. All right. So it's an entire psychological game that happens with this up move to this down move that people aren't really aware of. And so they try to justify it with a bunch of different things. Okay. But really, all it is where do we buy in and where do we want to get out? And where do we want to buy in again? Because we need to draw price back there, which is why you have sort of this staircase sort of motion in price where it'll come up and it looks like it really rallies, but then it'll come back down to areas that it was previously. And that's really all that's happening to us right now, guys. So let me offer my perspective on this when it comes to Bitcoin, because this is for Bitcoin specifically. Ethereum looks a bit different. I think they are really starting to decouple a bit, right? Any downward pressure on Ethereum gets eaten up really, really, really fast, but not so much on Bitcoin. Okay. Even on red Bitcoin days, ETH still seems to squeak out 1 or 2% on it every single day. All right. So keep that in mind, keep that in perspective. These things are starting to separate a bit from each other, and there will not be that correlation for very much longer, I believe. I think 2022 still, they'll hold hands and they'll say hi from time to time. But for the most part, their use cases and their utility is starting to be recognized in a different way, right? By the masses. Let me ask you this. When you first got into crypto, did you think that Bitcoin and Ethereum were similar and did similar things because they were just cryptocurrencies? Everybody thinks that, right? Until they learn the nuances and the differences in what these things can actually do and what they're built for and their purpose. As the market becomes more educated, that's when you'll see the decoupling. But right now, people are still very unaware of how crypto even works. Most of the investors are unaware of how crypto works. The big banks are unaware of how it works. The government is unaware of how it works. They're new to this still. And so with that in mind, we have to keep in mind that they're going to play the game a certain way with uncertainty until they become more sure of what these asset classes can do. And once they do that, then you'll see the decoupling. All right. So let's take a look at something that I like to point out on the daily chart. Okay. on this daily chart, this area here, right at the end of September, is very, very, very important. Okay, this is sort of the last week in September. All right, and let's take a look at the Bitcoin futures chart to see what was actually happening in the last week of September going into October. The large speculators were really sitting still, but you see when they really started to kick in those short orders, right? That was a direct correlation in what happened with price. Okay, so in order for them to really be in the money and win on shorts, especially when they're taking options, they need opposite end players for that in order for those options to really come out strong. And so they'll take those net short positions while they rally the price. Okay, now as this happens, okay, price is rallying, but then they automatically sit it still. Now, let me ask all of the retail traders a question, right? Now, don't get offended if I call you a retail trader. I'm a retail trader guy. If you don't have billions of dollars, you're a retail trader. All right, let's just keep it 100. All right, now here's the thing. If you see price do something like this, a downswing, right? Now, this is a weekly chart. So let's say we're in this week, then price rallies, but it doesn't break this high, right? Doesn't really break market structure at all. Are you convinced that price is going to keep rallying? No, you're not. But they are. And they take the positions short to rally the price in order for those options, once they start to want to execute them the following month, price is doing exactly what they wanted to do. So this rally here was a way to get retail in to buy the options long, because we think prices is going to break all-time highs and keep breaking them, right? Because that's what it did here, right? When did we break the all-time high? I think it was here, and then it broke it here, and then it broke it again here. This brings in long traders to automatically get slaughtered because these guys already set up their position. This is the correlation, folks, right? So if I'm looking at this, where they started it here, where are they going to want to finish it? Right here. You guys see how this works, right? And this is why I don't draw the trend line, because the trend line is not going to give me the order areas where these folks came into the market aggressively. And it's not going to tell me the levels that they want to go to when they want to get out of the market. This may accumulate right in this little area here between 41 and 42 for a while. But what is actually happening? They just brought price right back to where they left it. They're closing orders. Okay, guys? So these order blocks, these last pushes down before real launches up, right? Especially on higher time frames. These things will be revisited by price in order for the larger dogs to get their piece. All right? I hope this all makes sense. Now, there's an entire area of Confluence here that I want to point out. Right now, when I say Confluence, what I really mean is there's some things aligning in this area that don't really align in other places, right? So for price to come here into this area, it made sense, which is why I was sort of bearish for January, right? We did have the ability to push higher, but in my opinion, based on everything that I was seeing, especially the positions of the large specs, it didn't have me very convinced, right? They weren't taking extended positions. They were really hugged up close to that zero line, and they still are. But they're starting to move more bullish at this point, right? So if they cross over that zero line and they start to move higher, then you can expect some bullish price action, right? Because they want to see those longs execute in the next month. So start to think about that, right? We'll start to call that out, and we'll give an idea of when you may really start to see real bullish pushes. Now here is the area of Confluence. You have the order block, right? What most people like to call the order block here. This is the last down push hard before an aggressive rally, right? In order for you to qualify an order block, there's certain criteria that it has to meet. If price doesn't launch like this, it's not necessarily an order block. And you want to think about this as the last place that people left orders, right? The last place that the big dogs left their orders. And they are in a loss as they push price down for this day, okay? Actually, they're winning until price reverses. As soon as price reverses, their short position is at a loss. Do you really think that these guys are going to let that short position ride all the way up here without actually trying to push it back down with the orders that they took here in order to close out that book? Even if they take a small loss or break even, the objective was achieved. So it's really where they went inside of this area here. Where are the orders on this day specifically, which would be the 28th of September? Where's the closing orders there in order for these guys to sort of walk away clean with all of the money made long and short, right? And try to do it again from, right? That's the way I think about price. Now, if it doesn't make sense, just keep listening to me and eventually it's going to click, because it took a while for it to click for me. But if you understand things like support and resistance, right, it starts to make a lot more sense. But you have to switch support and resistance into where are the areas of liquidity sitting. And if you notice, they're sitting right below that order block, right? Now, if areas of liquidity are sitting right below an order block, what can naturally happen is that price will go back into this order block, as you can see it here. Now, just look at this, guys, right? When price took that hard dip, where did it stop? Right within this order block here, okay? Price came back down here. Where do we think it's going to stop? Somewhere within this order block. If it does go lower, it would be to liquidate, or not liquidate, but take the stop loss orders of all of the big institutions who were buying in this little zone right here, right before the end of the month. What I'm doing here, guys, is I'm telling a story on price. Because if you can tell the story of price, then you will understand price's direction, its path, its goals. Think of price as an entity itself. It has objectives to achieve, right? Price always has to balance its market. Price always has to go back and close the orders that it placed. Price always wants to swing up and down to bring in interest on both sides of the market. So if I understand that about price, and I understand that price itself is greedy and it seeks liquidity like a heat-seeking missile, I have a better direction on where price may want to go. And I can draw trend lines and things like that to support it, but it doesn't feed the narrative. It doesn't. Indicators do not feed the narrative. They just back up what price did and say, yeah, this is the printout. This is the history of what price did. But price itself is its own entity. It moves to and from something. What is that something? Liquidity and balance, order books. Where was the order placed? Where do we want to get out? That's really all of the dynamics that price has to achieve. It has a fairly simple job, but we give this no credit. We give where this ticker is right now no credit, unless it aligns to our line or theory or trend line, if you guys get what I'm saying, right? So what I'm trying to do is get people to focus on a deeper level of TA, to where if you're able to tell a story about price, it definitely opens your eyes up to why things like this need to happen, where they may end, and what may be the next result, right? So what am I thinking here? I think that this area of Confluence, of course, you have an order block, you have an area of liquidity, and you have a swing low here, which essentially is the last down point before price decided to rally. But before it rallied, it accumulated. Boom. All right. So I think if price is going to keep falling, it may fall within this order block. It may touch some of this liquidity, but I don't think it's going to go any lower than this swing high here, because this swing high sits at an institutional level of 39.5. All right, guys, 39.5, it's, it's a flat number. When big orders come in, they're not buying it at market price of wherever the ticker is. No, they're going to place the order at 39,500 or 39,250 or 39,200. Right? It just makes it a lot easier for them to do the accounting on their books when they place orders that way. So big institutional numbers, flat, even numbers, you know what I'm saying? Those are numbers that if you see them show up when you draw your lines on price, put a little bit more weight behind those, right? And you guys can see it here, 39.5, all right? I'm adding a little bit more weight to that number. Price can crash all through this, consolidate all through this. I would not be concerned. As soon as it breaks 39.5 and keeps going, bear market is in play. And we can confirm that if, in fact, the large speculators push long and then push short on their net long positions or their net positions on the COT. All right, so what I'm afraid of happening is if these guys push over this line and then back under it. If they push over this line and steadily sit there, you're going to see a steady increase. If they push over this line and they push hard over this line and then come back down, it might get very bloody in the streets out here, folks. Just to keep it real. It's gonna be nice and rosy for a minute, but then it'll get very bloody. All right. There's correlation here too, right? That helps us tell the story. When we look at things like the heat map, complete Red Sea, when there's blood on the street, buy. That's what they say. But I think if you're buying right now, you're buying a bit premature. Okay. A lot of these other cryptos move off of the weight of what Bitcoin does. When Bitcoin has really bad days, other cryptos have really bad days, and there's always like a shining knight that you could go to. So man is the shining knight today, right? Other than that, we can take a look at the Fear and Greed Index, which is at 15 right now. Was watching around the blockchain yesterday. There was a guy, I think his name was Crypto Lifer, and he said anytime the price goes to the 15 mark of the Fear and Greed Index, he buys. That's a pretty good strategy, to say the least, right? I mean, at least you're playing the market contrary to what most other people are doing, and that's just a basic rule if you want to be a successful trader, especially a long time hodler, right? You don't want to buy when the price is high because you're going to suffer through drawdowns, and if it ever breaks that all-time high again, that's where you're going to see your wins. The best time to buy is when you're in the fear and greed, right? When you're in the fear, not the greed, rather, right? When Bitcoin people are fearful and prices around 15, this is usually the best time to get in. But again, I think that you still have some lower objectives here that still want to be tapped into. Now, here's the thing. They did touch the order block, which means that they may have closed out those orders. Traditionally, when you're trading order blocks, you're trading it from the top, right? So if I'm coming down and I'm retracing back into this area, sort of the top of this order block is where price may want to stop. But this is a daily chart. If I really want to zoom in to where this order block is, I can do that. All I have to do is go to the 1 hour and sort of pull it out, right? And you can see we had that spike through. Now, where was the last hard down push before we actually launched? Right? On hourly, I probably want to use 3 or 4 different candles because this is a sustained price action before the down push. And actually right here is not so bad of a place to put it, right? Because look at this. It's really just an accumulation zone before the launch. Boom. And you see how they really didn't come back down below these highs after they launched? This is a good area to place the order block. It gives me context. So you see on an hourly chart, the price could swing right in this area and sort of just stay boxed in here. But this is an area of accumulation, just like this, right? See these rejections? This is sort of a setup to get this going here in order to launch the price. Okay, guys? And that's what we're looking at. So these are the levels that we're calling for Bitcoin. All right, let's just recapsulate them. And then, of course, we will always be checking in to see if these levels are making sense down the line. All right. Once again, I think you are in an area of accumulation at this point. The bigger whales are going to start closing orders that they took in order to initiate this price action. That, in fact, will start to push the large speculators, I believe, long. Okay, we can see them creeping closer to this zero line on the COT, but nothing is guaranteed with these people because, as you can see, they'll creep close, they'll sit still, they'll creep close, they'll turn around, they'll creep close, they'll reverse. Okay, so we have to be leery of what's happening with the large speculators and how they are playing us in our own positions. Okay, long and short. There's also an area of liquidity directly below this order block. Now, if price were to go for this, then I think that you may have a real chance to swing down to 39.5. If you break 39.5, it's sort of ball game for some of these guys over here. And actually, price may want to seek lower areas of liquidity around 38,000 down. There's also areas of imbalance here, right around 36 to 35. Right? And this is the last area that we left back in July. This is the last order block that we left, which is right around 31, between 31 and 29. So there are areas that price could go to further, but do I think it's going to go there? No. No, I don't think it's going to get there. I think depending on what happens with, inflation rates and a lot of other different things that are going on in the market right now, you have a chance of this sort of sustaining itself above 40,000. If it were to break between 40 and 35,000, it gives me more of a reason to be concerned, right? So that's the outlook on Bitcoin. I'm gonna bring a few more cryptos into the fold as far as analysis here, guys. But when it comes to price action and the way that things move, I think Bitcoin honors traditional price action rules the best out of really any other crypto. Ethereum moves in very volatile, shifty ways, right? Um, what we're going to start to do is classify the movements. I think Bitcoin moves traditionally like Forex, right? It goes for equal highs, it goes for equal lows, it fills imbalances, it does all of the things that traditional finance, Forex, those algorithms do. The same things happen on Bitcoin, I think. And there's a reason for that, right? Because if there's going to be some sort of hedge against inflation against all of these other currencies that are out here, it should sort of move like a currency. And it does. Okay. You can look at Forex charts and make comparison to Bitcoin charts and some of the price action that happens there. Ethereum, not so much. I think Ethereum moves sort of at its own pace, its own speed, and as more institutional money piles into Ethereum, it may move in similar ways to Bitcoin, but it's going to decouple because of all of the other things that it offers, right? If Ethereum's not being seen as a store of value, but rather more as a technology company, right, which is how a layman would probably explain it, then it's going to move like a technology company, right? The translation from how those companies move to that will be the same in regards to price action, right? So just knowing these little things and these correlations in price also will give you an edge on how price may move. So we'll start to classify these things as well, because these things will move differently, and you want to know how to trade when these things are moving in the patterns that they define for themselves. Okay, so we'll dive a lot deeper into that. Thanks for checking us out. I'm going to leave a video here. We do have a crypto 2022 prediction video that is coming out fairly soon that I think you guys should check out, because I dive into everything from BTC, ETH, the overall market, DeFi, metaverse, gaming, NFTs, everything. I talk about it all. All right, so be on the lookout for that. It should be coming soon. In the meantime, we're going to go ahead and log off for the day. Y'all take care. This is the long and short. If this video offered you any perspective that you think you may find useful as you analyze the crypto markets, go ahead and subscribe. Go ahead and like. We will be explaining these things in depth. Okay, I'm going to give you levels and give you the story that price is telling every day. If this is the type of TA that you think will help you, right, then by all means, subscribe. Leave a comment. Let me know what you think about what I'm displaying here. Let me know if I can explain it better. Let me know if I can draw these levels and show you how I find these things on the chart, if that can help you, right? We're going to do things like put together educational videos as well. And to be real, guys, they may be pretty long videos, right? Do you have the endurance to sit through that and kind of, let me spiel out all of the things that I know about this stuff? That's going to be the telltale as to whether or not you guys rock with me. We want to show you the areas where price wants to go, tell the story behind why it may want to do things, and give you the narrative as to why it may move up or down, not just say it's going to move up or down. In depth with other things besides just a trend line. All right, guys? So, once again, this is the long and short. This is your boy Maestro. Thanks for tuning in. Go ahead, like, subscribe, comment, share. Do all of the good stuff, man, to help grow this channel, because I believe that this information right here is going to help a lot more traders out there in the wild that are having problems with all of this up and down price action, when in all reality it kind of reveals itself to you if you know what you're looking for. All right, that's it, folks. Take care. We out of here.